Welcome to the Capital News. I'm your host, Alex Karitis. Today is Thursday, April 8th, 2021. Thank you so much for joining me. The title of today's podcast, Another 750,000 Bite the Dust. Today is Thursday, so it is our typical data dive. Initial jobless claims came in at 744,000, well above market expectations. And that's just for regular state unemployment. But let me read to you the headline on tradingeconomics.com. And when I go over market performance, that's where I'm looking. I'm looking at tradingeconomics.com. I really do like their website and the data that they have. It's basically a one-stop shop. But here's the headline. U.S. weekly jobless claims rise. The number of Americans filing for unemployment benefits rose to 744,000 in the April 3rd week, from the previous period's revised figure of 728,000 and above market expectations of 680,000. But here's the rub. Still, claims remained well below the 800,000 mark for a seventh consecutive period, adding to signs that the recovery of the labor market is gathering pace, helped by the rapid vaccine rollout program and the government's $1.9 trillion pandemic relief package. That's a bunch of hogwash. So, okay, we're below the 800,000 mark for a seventh consecutive week. Now, again, that's only for regular state unemployment. That does not take into consideration the PUA program, which is an entirely different program. That is a federal program that was created from the Nobody Cares Act 1.0. That has been extended and extended again. So we have been well over 800,000 for the past year. And that remains the case again, and we'll get into those details here momentarily. But how can you claim that the labor market is gaining steam here? It's gaining momentum. We were just told last Friday with the official jobs report that came out. It was a stellar report, we were told. Last Friday was Good Friday. Markets were closed. This week, start of the week on Monday, markets rallied. Why? Because it was a stellar jobs report. Again, there's no such thing as bad news or terrible news or good news or great news. As far as the markets are concerned, it's all fabulous. It's just all fabulous. Because it either means that the economy is getting better, so stocks rally, or the economy is getting worse, so that means more stimulus, more funny money, more spending, more borrowing, more printing. Only up, 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 and away. So we have numbers for over a year that are well above the levels during the depths of the great financial crisis. And we get headlines like this, that it's gathering pace. And it's being helped because of inflationary policies. This is why so many people don't understand what's going on. Because people don't have a deep understanding. And you don't even need a deep understanding. You just need some critical thought. You just need some independent thinking. Does this make sense? You need a little bit of context and perspective because most people don't know how to read these numbers. They don't know how to find these numbers, and they're not that difficult to read, to understand, and to find them. But people don't take the time. And to a large part, that's understandably so. People are busy, people are working, people have other priorities. I get it. But you have to be an informed citizen because you have to be an informed voter. And if you're not, then you're going to continue to vote these idiots into office. They continue to run amok. The inmates are running the asylum. There's no accountability, there's no responsibility, there's no truth-telling. It's all kicking the can down the road. It's all smoke and mirrors. It's all make-believe. That's all this is. But at the end of the day, it's also real. We're going to have to pay for all of this stuff, and it's going to be extremely expensive, especially for younger generations and those yet to be, who have absolutely nothing to do with this, but they are going to have to pay the price of these reckless policies. Higher cost of living, fewer opportunities, less prosperity. This is simple mathematics. That's what debt is, especially to this degree. It is bringing future production forward to today so we can fill the void, so we can make things look better than what they otherwise would be. Yet in the process, we are creating one zombie company after the next, small, mid, and large. It does not matter. That is exactly what we are doing on a day-by-day basis. Politicians applaud themselves and each other and pat themselves on the back. The media congratulates them and central bankers for financing all of this madness. And we wonder why nothing ever changes. It's one big club, as George Carlin used to say, and we ain't in it. And we know this. We know where the money's going because we talk about it here all the time. We've been talking about the wealth inequality, the changes in net worth amongst the various percentiles, and we know where the bulk of it has been going and where it continues to go because we know that quantitative easing, these types of policies, are the biggest wealth transfer that has ever been conducted in the history of mankind. And they are putting the pedal to the metal. And we'll talk about the Federal Reserve's balance sheet update as well. Before we get to market performance and the initial jobless claims report, there is some geopolitical news. All of this has been brewing on the surface, just beneath the surface. It was just a matter of time before it started making headlines again. But you have increased tensions between Russia and Ukraine, which means the United States is getting involved in trying to throw around our weight as well. A bunch of strongmen or supposed strongmen sitting around the poker table trying to bluff each other, or perhaps some of them aren't bluffing. We're going to find out here momentarily, I do believe. So we're sending our Navy all across the world, Asia, Middle East, Europe. We have Chinese and U.S. tensions rising too. You have the Chinese military and their navy sailing around Taiwan, the Philippines. The Taiwanese and the Philippines don't like it. Neither do we. So there's some pushback there. With respect to Russia and Ukraine and the U.S. getting involved, at least rhetorically, Germany has to step up to the plate too. And German Chancellor Angela Merkel is saying, okay, boys, take your toys and go back home. Settle down. Don't allow this to escalate. We don't need any more friction. We don't need any more tension. We definitely don't need conflict. And, of course, she's right in saying that. But this is for self-preservation, too. Because Germany gets a lot of their energy from these countries. And she knows how fragile her economy is because she's a little dictator over there and has shut them down. So she knows how fragile everything is. Plus, it's an election year, and she doesn't want to have her party, which is already on the verge of losing. She doesn't want to throw any more wrenches into the system that causes her political party to lose. Now, of course, Angela Merkel is done. She's gone. So somebody else is going to be taking over the chancellor position in Germany. Then you have the Italian Prime Minister, Mario Draghi, who, don't forget, was the previous president of the European Central Bank, the ECB. Again, this is a central banker's paradise, okay? Little dictators all over the place. So he speaks up and says the Turkish president, President Erdogan, is a dictator. So we got one dictator calling another dictator a dictator. What a surprise. And the Turkish president doesn't like it. So now there's tensions there. And as we have mentioned before, Turkey, economically speaking, is crumbling. Yet they are also very important geopolitically speaking because of their geographical location. And if the Turkish economy were actually strong or was turning around, it could be a vital economy. I mean, it is a top economy by GDP, even though it is crumbling. But that's the point. We have larger economies starting to crumble. That's the point. Runaway inflation. We can only imagine the type of corruption and nepotism that's taking place in the highest levels of that government. And at the same time, you have European nations through the EU trying to curry favor with Turkey to get them to become a member or at least to have good trading relations with Turkey. But you also have other countries who are interested in Turkey for the same reasons, such as Russia, such as China. And I can imagine that President Erdogan understands this, and I'm sure he's playing all sides against each other for his benefit. Whether it's for the benefit of Turkey, maybe, maybe not, probably not, but most definitely for him. Then, many of you are probably aware as well that there have been week-long protests taking place in Northern Ireland because of all of the Brexit fiasco. So we're still not out of the woods with all of this stuff, folks. Just because it's off the headlines doesn't mean that it has been resolved. And yet the markets, they just continue to march higher because there's no such thing as bad news or horrible news or good news or great news. It's all fabulous. It's all fantastic. It's all there is. It's the money printing. And as long as that's taking place, that's the only narrative that matters to these junkies and these crackheads on Wall Street and other financial centers around the globe. It's all that matters. Here's another devastating story. And this affects our friends to the north up in Canada. This is out of Bloomberg. 53% of Canadians on the brink of insolvency. So a new survey by MNP Limited has found that 53% of respondents said they are $200 or less away from not being able to meet all of their monthly bills and debt obligations. The number is alarming as it marks a 5-year high in the agency's Consumer Debt Index and marks a 10-point jump from a December survey. So things are deteriorating at a faster clip. This number includes the 30% who said they are already insolvent. 30% who already say that they are insolvent with no money left over at the end of the month. This is in Canada, one of the largest economies on the planet, with a lot of good people, beautiful country. A shame that this is happening. And of course, we have heard from a couple of audience listeners who have made some comments with respect to what's going on in the real estate market and with further lockdowns, at least within the Ontario province. Because you got another little dictator up there in Justin Trudeau who think they know best in the Milgram experiment. You got to keep going. No, this is part of the experiment. Don't stop. Keep doing it. This is part of the experiment. Everything's going to be okay. Don't worry about it. Keep your mask on. Put 2 masks on. Take a vaccine. Take another one. Wait 6 months. Do it all over again. You're non-essential. You're a small business owner. Shut down. Sit down and shut up. Well, yeah, but I sell the same stuff that the big... Sit down and shut up. Do you get what's going on here? They are killing us. They are killing us. And you have now, since the 1990s, for the first time, the global middle class is contracting. Well, no surprise. They're shutting everything down. Supply chains are disrupted. Oh, it's unbelievable. And of course, what's going on in Canada with the housing market is completely insane. No wonder people can't make ends meet. I mean, you're buying a shack for $1.5 million. People are doing this sight unseen. But there's no bubble. No, ladies and gentlemen, there's no bubble anywhere. Oh, and there's no inflation anywhere. Oh, heavens no. There's no such thing as inflation. All of these geniuses, one central bank after the next. Oh, no inflation. Don't worry about it. We have the tools in our toolkit to handle it. The only central banks that admit that there's inflation are the ones where it's so obvious that they can't jerk people around anymore. And that's going to pick up pace. And it's going to start affecting larger economies. And of course, we just gave a $650 billion gift to the IMF so they can give it out to all of these poor and middle income countries so we can kick the can further down the road because they know, the powers that be know what's taking place. They know what's happening. They know all of these countries are on the verge of insolvency themselves. It's not just the individuals in one country after the next, even a country such as Canada. And of course, the United States isn't much better. We know the statistics here too. They're just as bad, if not worse. But there's other poor countries too that are on the verge of collapse. And as we talked yesterday with Uncle Sam's junk being debt, with Uncle Sam's debt being junk, that's another thing you have to look at. Because if we continue to witness increasing yields in our treasury market, well, guess what? It's going to look a little bit more attractive to investors around the world, and they might get out of emerging market debt. So some of these poor and middle income nations. So what will that do to those countries' borrowing costs if you have a lot of investors selling off their sovereign debt? Oh, that's right. They sell, the price goes down, and their yields spike. So you're going to create a vicious cycle. Janet Yellen and company understands this. Jay Powell and company understand this. And Dingbat Yellen's giving away $650 billion U.S. taxpayer dollars. Because she can, because she wants to, because she thinks it's right. No accountability. None whatsoever. So I just want you to be aware of all of the geopolitical events that are taking place and could break at any moment. Because when you have all of this tension, when you have all of these different countries and their militaries in these areas, it increases the likelihood of a mistake, somebody pushing a button, a false flag attack, and before you know it, we're in another conflict and, God forbid, another war. So pay attention. We have the dollar index at 92.12, 92.12 on the dollar index. Let's see, some of the bigger movers right now in the overnight session on Forex. We have the dollar, the U.S. dollar appreciating against the Aussie, putting on a gain of about 1/3 of 1%. However, the New Zealand Kiwi is putting on a gain against the dollar of about 0.7 of 1%. So those are pretty big moves in those currencies. Anything else is pretty much relatively stable at the moment. Overnight futures trading, we have the Dow Jones Industrial Average relatively flat. The S&P 500 is up about 0.2 of 1%. The NASDAQ 100 is putting on a gain of about 1/3 of 1%. Markets rallied across the board today on Wall Street. Why wouldn't they? Terrible news with weekly jobless claims figures, but there's no such thing as bad news, so it was great. Great. We have the S&P 500 right now at 4,105 points. We just crossed the 4,000 threshold. Now we're already above the 4,100 level. Cash trade in Japan is putting on a gain of about 0.75 of 1%. Pretty much a sea of green across the board, across the pond in Europe today. Australian cash trade is currently in the red, down about 0.2 of 1%. Chinese stocks are currently flat. On the commodity front, WTI is at $59.65 a barrel. Brent, $63.12. Natural gas, $2.51. Gold and silver both had a good day today. However, both are currently down about 0.25 of 1% overnight. Gold, $1,751 an ounce. Silver, $25.36 an ounce. And copper is hanging on there at $4.07 a pound. And lumber continues to make another all-time high, trading at $1,106 per 1,000 linear board feet. So there you have it. So you talk about the housing boom. I mean, we're just adding more and more dollars on a daily basis to the cost of new construction for the average home. And to round it out, Uncle Sam's 10-year junk note is yielding 1.63%. So it has been coming down as of late. So that brings us back to where we were yesterday with the Federal Reserve releasing their meeting minutes of last month saying, well, it's okay that these yields have been increasing because that's indicative of an economy that is on the path to recovery. All right, fantastic. And I said, all right, well, then the opposite must be true. If yields are going down, then that must mean that it's indicative of an economy that is weakening. So I don't know what their threshold's going to be. Nothing goes straight up, nothing goes straight down. However, if the yields, especially on the 10-year note and the 30-year long bond, if they should reverse course and go down, what level is it going to take before the Fed comes out and says, no, the economy is weakening? Will they ever admit that? Will they ever say that? Or are they going to change their narrative and say, oh, no, that's a good thing. People are buying our bonds because it's safe. It's safe. It's a good investment. And so that's pushing the yields down. So that's good. I mean, they're always going to change their tune. They're always going to change their story to suit themselves. You know, kind of like a con man. Oh, that's right. They are con artists. That's right. They're running a huge Ponzi scheme. I forgot about that. So they're always going to change their story to fit whatever their narrative is, whatever suits them best. They're trapped. That's why they always got to change their tune. But as long as the markets continue to buy the BS and they continue to welcome the heroin and the crack liquidity that they keep throwing in the system, then up and away, I guess we're going to go until the system reaches exhaustion, or maybe some of this news turns bad and the market realizes it, and who knows what happens from there. All right, on to the Department of Labor's report here, initial jobless claims. So for the week ending April 3rd, initial jobless claims seasonally adjusted came in at 744,000, a week-over-week increase of 16,000. The revised level from last week is at 728,000, a revised increase of 9,000. Initial jobless claims on a non-seasonally adjusted basis came in at 741,000, a week-over-week increase of about 18,200 individuals. For the week ending March 27th, continuing claims, seasonally adjusted, came in at 3.7 million. Non-seasonally adjusted for continuing claims came in at 4 million, slightly above 4 million. For the week ending April 3rd, for the Pandemic Unemployment Assistance Program, again, that's the PUA, created by the Nobody Cares Act 1.0, extended 2 times, came in at 152,000, a week-over-week decrease of a little over 85,000. So when you take the 744 plus the 151, you're almost at 900,000, okay? That's how heartbreaking this continues to be. That's how structural these problems remain. It was not a stellar jobs report last week. It was nothing to rally about. Nothing whatsoever. Now, if people are finding jobs, I'm happy for them. No question about it. But a lot of the jobs that have job openings, and a lot of the jobs that are quote-unquote coming back, they're low paying. And so a lot of people are making just as much money sitting on their couch, collecting unemployment from the state or from the feds at the PUA or PEUC level programs. And they're just saying, well, I'm not going to do it. I don't have to do it. I really don't want to do it. And I'm making just as much, if not more. And maybe some people are going in and they're working for cash. They're working under the table. So we have so many distortionary effects. It is extremely difficult to understand the true gravity of the jobs picture, which I have been screaming at the top of my lungs about since last year when they passed the Nobody Cares Act. And that's exactly what we continue to witness. And we're going to continue to witness it so long as they continue to kick the can down the road and extend these policies one after the next. People are being conditioned. People are being conditioned. This is basically a beta test of universal basic income, UBI. That's what we're going through right now. Sit down and shut up. Take your money. You don't have to work. Don't worry about it. And you can still buy stuff. You can still buy stuff. Even though it's killing our twin deficit, federal budget, and our trade deficit. Killing us. Don't worry about it. It's funny money. We're just going to print it, and we're going to say that that is wealth. We're going to say that is GDP growth. A bunch of nonsense. But they'll calculate it as such, and they'll print reports as such, and they'll tell us as such that this is the greatest recovery ever, that everything is great. Yet over a year into this insanity, we still have nearly 900,000 individuals losing their jobs on a weekly basis. It's disgusting. And nobody says a damn thing about it, except it's stellar reports. Everything is great. Taking everything in aggregate, regular state, federal employees, newly discharged veterans, the PUA and PEUC programs, extended benefits, state additional benefits, and a work-share program gives us a grand total of 18.1 million for the week ending March 20th. Recall this figure lags a couple of weeks for the grand total. That is a week-over-week decrease of some 51,000. So that is the tightest variance that we have witnessed here, I would say, for several months or several weeks at least, because we're typically seeing huge swings of several hundred thousand, if not millions, on a week-by-week basis in the grand total. But nonetheless, this still gives us a de facto unemployment rate of about 12.7%. a de facto unemployment rate of about 12.7%, which is more than double the official unemployment rate, which came in last Friday at 6% even. All right, and that number is, of course, just it's complete garbage. And again, I have to remind the audience, even the Federal Reserve is calling out that official government statistic of the unemployment rate. This happened a couple months ago, and that's why I have to continue to remind the audience, because this is very important. Because Federal Reserve officials do not question official government statistics. They just don't do it. And if they do, they don't say, well, yeah, they said it was 6.3% at the time, but it's really closer to 10%. They just don't do that, but they have to. Right now, well, they don't have to, but they choose to, because they want to keep the Ponzi scheme going. They want to keep their little narrative going. So they have to justify their actions. They have to justify the continuation of $120 billion per month, at least, in the continuation of purchasing treasuries and mortgage-backed securities. Even though, as I stated yesterday and many times before, why are they continuing to do this? Especially with respect to mortgage-backed securities. They did that over a decade ago because we were in the midst of a housing crisis. What do we have now? We have a housing boom. We got a housing boom. Prices, people are buying houses sight unseen. Tens of thousands of dollars above ask, if not more. What's the problem? Why do you have to continue to buy this stuff? Well, it's because a lot of it is still junk. Or they just want to buy everything. Could just be about control. Could just be about ownership. And they want to print the money and buy real assets with it that pay a coupon. That's what they are in the process of doing. And again, nobody questions this. Oh, that's fine. You want to do 120 billion? Fantastic. You want to make it 240? Do 240. You want to do 480? Make it 480 billion a month. Do whatever you want. There's no checks and balances on these people. Nobody questions them. They are not elected by you and me. Congress doesn't hold their feet to the fire. Presidents don't hold their feet to the fire. They applaud them. They thank them. Because it saves the politicians from going back to their districts to tell them the truth. This is nonsense. We can't keep doing this. We're going to have to cut your benefits. We're going to have to raise taxes. We're going to have to do a whole bunch of things to get our books in order. Oh, no. I can't. No. There's no such thing as responsibility here in the United States of America. No such thing as accountability. We can't do that. Now, can we? Oh, no. We can't do that. So keep printing the money. Yeah, just keep doing it. We'll allow inflation to just wash all of our problems away, even though inflation is going to become the biggest problem, one of the biggest problems we've ever faced. It's coming. A lot of it is already here. And then just to check on the Federal Reserve, where are they with their balance sheet? Hitting 7.7 trillion. 7.7 trillion. A little bit higher, about 20 billion higher from last week's level, but still about 10 or 11 billion below an all-time high that we saw back during the week of March 24th. So we're still steadily climbing up. It's a nice little step-like pattern, week by week, week by week. And we're going to continue going through the remainder of the year, at least at that pace of $120 billion. And that's pretty much assuming, quote-unquote, smooth sailing according to these idiots. Yeah, everything's on track. Everything's getting better, but we have to continue with these emergency policies. The federal government has to continue to spend trillions upon trillions of dollars that we do not have, yet everything's okay. This does not make any sense whatsoever. So something's cooking. Something is cooking. But there you have it, ladies and gentlemen, a lot of geopolitical risks. We still have, inflationary crises across the globe. We got people, because of that, starving to death. We got refugees all over the place. A lot of tensions, and not even just in the countries that I mentioned at the top of the podcast, but all over the place. All over the place. And a lot of this doesn't even get discussed it does get discussed on international media. U.S. media really doesn't cover it. You'll get some articles, but you got to go digging for it. You got to know what to look for. They got to keep us entertained with, all of the absurdity that we witness on a daily basis. That's the crucial stuff. And, I feel for everybody. For the people that are suffering in this country, the Canadians who are suffering paycheck to paycheck or $200 away from being insolvent, and all over the world. This is ridiculous. And yet we print trillions and trillions of dollars, and yet we still have all of these massive problems. Something is not right. How can this be? Do you know how much $1 trillion is? Multiply that several times over. That's how much we have been spending globally. And we still have all of these problems. How can this be? Until you understand it is one big club, and we ain't in it. Another 750,000 bite the dust. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.